The graphics of candlesticks point out some very obvious factors. For example, the Dow over the last couple trading days, Thursday and Friday, did dojis right on the T line. The T line was already indicating we were in an uptrend. It also indicated that on Thursday and Friday they weren't going to trade below the T line, and Monday's trading told you they were staying up above the T line, making this uptrending move still a very high probability situation. Is this indicating any exuberance? When you add the fact that the NASDAQ is doing a nice fry pan bottom, staying above the T line, even though it traded lower today, it didn't tell you there was any drastic change of investor sentiment. And note how it even used the T line as support. The fry pan bottom is still in progress. Unless there's a major change, meaning a strong selling day, it has to be assumed that everything's still moving in the right direction as far as the bulls are concerned. Being able to analyze what each commodity is doing, such as crude oil, we can see that crude oil is in a nice steady uptrend ever since it did the buy signals, the Morningstar type signal right here at the 50, the close above the T line, still moving up. Now it might be getting a little bit exuberant, but that has been making the crude oil stocks very attractive. Our recommendation on CRC was based upon this J-hook pattern and then the best friend breakout through this level, giving us a very common 45-degree move. And notice how this uptrend continues as long as it stays even above the T line, let alone the 3T line, which is a stronger trend indicator. Whiting oil or petroleum illustrates the same thing. A doji gap up, J-hook pattern, uptrend stays in progress. The nice thing about the graphics of candlesticks is that if you see a strong signal, you can also apply it to be in a pattern that gives you additional probabilities that you're heading in the right direction at the right time. It also demonstrates when to be in the bearish direction or in a sideways chart, as we can see in Labu, the biotech ETF. Right now you don't want to be long the biotechs, more than likely you want to be short. Analyzing Nugget, the gold ETF, pretty much tells you there's really not any great direction right now in gold. So there are going to be times when they tell you it's time to be in, and then there's going to be times when it tells you you don't want to be in this sector. This allows a candlestick investor to allocate their trading funds to the most appropriate sectors. And even when trading the high flyers, like in TLRY that went from $25 to $300, now it's doing a J-hook pattern, providing the opportunity to see that the profit taking was over and now the buying's coming back in. This allows the candlestick investor to make trade strategies that may take advantage of a high percentage, high profit, or a high volatile trade setup. For example, anticipating where the next price move may be and doing some low risk call spreads where you don't have a lot of money exposed, but you've got big upside potential. Because of the graphics of candlesticks, the investor has a much stronger illustration of what's going on in investor sentiment, telling you the likelihood of not only the direction of a price move, but what the magnitude of that price move may be. This is where you can consistently pull big profits out of the market by knowing that every time you put on a candlestick trade, the probabilities are in your favor. That'll be it. We'll see you in the chat rooms.